Welcome to TradeSpoon in Yellow Tunnel. My name is Lak Harpel. I'm CEO and founder of Yellow Tunnel, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions, answer any questions you might have about your Yellow Tunnel subscription, determine what to expect in the market, short-term, medium-term, how to hedge your portfolio, and how to take opportunities in the market. Before we begin, very important to look at the disclosures. Lalit, John, Brad, but I think everybody, I don't see any new names, but there'll be a recording. So if this is the first time you see this slide, I encourage you to visit optionsclearing.com, the link on your screen, to understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal past performance. Okay, before we jump into trading psychology, let's look at the market conditions and see what to expect. All right, so let's look at spiders. Let's first look at the interest rates. So interest rate stable, right? We've been talking about 4.3% as a main line in the sand between elevated interest rates when we approach 4.6, 4.8. Then you have fear of stagflation, fear of tariffs and inflation. When we drop to below 4, 3.8, 3.9, you have a fear of recession, right? And we're kind of in the middle of that zone, been stable, so that's good. So that's 10-year yield after the first wave of Liberation Day, and then end of July, second wave. Dollar has been oversold, staying oversold, stable, kind of same place it's been during the first wave of Liberation, right? So it's still staying at that level, not moving higher nor lower, oversold, but still. VIX slightly higher today. We have a short-term pullback. QQQ is down 1.5%, probably one of the first sessions in quite some time where QQQ is down 1.5%. Semiconductors are down 2%. What else? Small caps. So after CPI data last week, right? After CPI data last week and perception that, or expectation that the Fed will have to cut interest rates since there's no inflation, we have a jump in small caps, jump in regional banks. We had a similar price pattern in regional banks, in home builders. All right. After PPI data, which came in a little bit harder than expected, the expectation of 50 basis rate cut in September significantly dropped. So right now, most people expect 25, based on the futures data, expect 25 basis point cuts in September. We do have Jackson Hole meeting on Friday, Thursday and Friday. Friday, I think Powell speaks, I think around 9 a.m. Eastern time. Alex, welcome back. Chuck White, welcome back. George, welcome back. All right, we have a few. Lalit, Dr. Simon, great. Thank you for joining, appreciate it. So we'll see if this is a true breakout or if this is a false breakout, right? The false breakout are not a good price pattern. So small caps trading right on that line. You can look at the QQQ breakout. It's actually trading below the breakout level of end of July, right at the 20-day moving average. And SPX trading right at the 6,400, the 20-day moving average, right? So if you look at our model, right, if you look at earnings, let's see. I removed the spiders. Let's try to find it somewhere. Here. So the model still predicts an uptrend, right? The uptrend remains in the potentially reaching 655 level on S&P in the next few months, and it does see support at 6 643 and overhead resistance is 648, right, based on our model. So short term, we're still trading an uptrend. I mean, despite today's pullback. And if you look at the positioning, right, we looked at it this morning, the gamma flip has been moved to 6,400. This is exactly where we're trading at 6,400. And the put wall, largest concentration of put buying, right, after the expiration is also at 6,400. And we talked about expiration last week, that half of these contracts has expired, right, in August. The August expired. In September, slowly building position, right, we're at 60 billion total gamma for the September contracts. Not a lot of position in October. Is it enough to hold the bears? We'll see, right? Depends on the news. Biggest expectation is probably, again, Jackson Hole and Powell's speech on Friday. For now, 6,400 is the largest concentration of puts, and then 6,500 is the largest concentration of calls, right? And those are your main support and resistance levels. So 6,400, right? We talked about the, for day traders, that was the line in the sand for today. So that's your support number one. We're approaching that level. 6,500 is your resistance number one, right? This is your main resistance. If we break 6,400 previous flip point, right now flip point is 6,400 as well. So this has become a very important level, because if the 6,400 does not hold, we could quickly drop to 6,300, which was a flip point just not that long ago. So that's your support number two. Right? If we drop below 6,300, then the sell-off could accelerate to either 6,200 or 6,000, right? Those are your support number three, support number four. So if you look at the based on positioning options data, right? Let's switch our attention to September expiration. Right, so let's look at September expiration, which is September 19, and October expiration, October 17. Right, so one standard deviation, we are basically are able to break 6,500. There's already some buildup in 6,600, and we reach in 6,600 or above, right? So that's scenario number one. Scenario number one, we're moving beyond one standard deviation move, right? From the we're at 6,400, right? So that's scenario number one. Scenario number two, we're trading above this level. Scenario number two, we're trading between 6,600 and one standard deviation to the downside is actually 6,200, right? 6,200. So that's scenario number two. And then scenario number three, right? Scenario number three, we are revisiting or breaking the 6,000 level, 6,000 level. Between now and, this is end of September, October, right? The earnings season is behind us. Next big event would be Jackson Hole meeting. Then we have some deadlines for tariffs, right? For China, I think Mexico got pushed negotiation by another 90 days. I mean, we had some weakness in employment data, right? So employment data continues to cool off, right? So, that could be signs of recession, or if we have if the August employment data is already cooling off again, right? That could, then the market could sell off more. So that's scenario number three, right? Scenario number two, we're trading in the range, right? We could have, and earnings is decent, right? A lot of companies revised up. I think 40% of S&P 500 companies revised to the upside. So, which is a pretty high percentage. So scenario number two, right? And scenario number one, maybe Russia-Ukraine ceasefire or peace agreement. And we are at scenario number one. Okay. So one standard deviation, we're trading somewhere between 6,600 and 6,200. Sorry, scenario 2, 6,200, 6,600. Scenario number 1, above 6,600. And scenario number 3, we're revisiting 6,000 or breaking that level. So how many of you think we're going to get to 1? How many of you think 2? And how many of you think 3? Scenario number 3, between now and October. Alex, 3. Chuck, 2. Thank you. George, Lalit, what do you guys think? Dr. Simon? So between now October, I'm going to go with scenario number 3, right? We already see today signs of weakness, right? We're at 6,400. I'm not sure what the positive catalyst, Russia-Ukraine probability of peace agreement between now and October, I think is very small, right? We already have earnings season. So I think the setup is very vulnerable for negative surprise. We already had a rise in PPI data last week. We had jump in the initial claims. The average initial claims continue to go higher. The job openings, not job openings, but job creations got revised to the downside for the past few quarters. So I think, one or two negative news on macroeconomic or tariffs, right? And then we could probably have a bigger pullback than just, 3 or 4%. So I'm going to go with scenario number 3, right? But first thing first, we got to look at the 6,400, right? So I'm going to go with 3 as well. Trade what you see, not what you think, right? This exercise is important to determine position size, right? If you think we're going to go to 6,000, maybe it's time to raise cash, right? And have maybe less positions. If you think we're going to 6,600, then the opposite. But first thing first, right? We're going to confirm that this is a false breakout, right? This is July high. We broke out of it in August on better than expected CPI data. We basically gave away all of the gains after that better than expected CPI print last Tuesday, and we rolled over and tested a very important level, right? So 20-day moving average, 6,400 level on SPX, very important level. So I would watch that. As long as we're trading above that level, I think we're still have support from the bulls. If the 20-day moving average in 6,400 does not hold, which is somewhere around 6,380, 6,400, then I think that negative gamma, the sell-off can accelerate. We could revisit maybe even August lows, right, initially. I mean, you have 6,300, but somewhere between 6,200, 50-day moving average, right? That would be your, support. Initially, probably holds, right? But it is possible something like this, right? And then maybe another wave down, right, to the 200-day moving average. I think this is opportunities. I don't think we're going to have a 10, 20% pullback, unless something happens in the market. But short term, I would be patient, not chase the market. And if you're bullish, maybe 6,200 is a good buy, maybe 6,300 is a good level to consider buying and trimming condition. You can see this whether you look at the Nvidia stock or you look at the Bitcoin stock, they're all kind of slowly rolling over. Any questions? Okay. So meanwhile, again, Bitcoin is also, I would watch the IBIT. I think Bitcoin should be the same, right? Yeah, same setup. So Bitcoin, right? It's looks like it's already retesting the July lows, right? End of July lows on this breakout level, and this has been a good proxy for risk taking. So Bitcoin is below 50-day moving average. This is something I would watch carefully today and tomorrow. Small caps, I would watch the small caps. Again, these false breakouts, 225 was the breakout. That's July high. If we roll over, I think that would be negative. QQQ, similar setup, right? It's below 20-day moving average and it's below the breakout, end of July breakout. So that's also a vulnerable setup for the market. What else is interesting? VIX, I mean, not a lot of fear. It's only 15, right? And then what else? That's about it. So let's look at the watch list. So retail sector, we're in the middle of retail. I mean, retail data was a little bit better than expected last week. And then we have Home Depot, earnings from Home Depot. They came in, I mean, in line with expectation, but better than expected. So Home Depot is up 3%. Lowe's is tomorrow. You can see retail target. The retail sector has been doing relatively well. Again, this expectation of lower interest rate will benefit interest sensitive sector. So XRT retail sector has been in strong uptrend. Let's look at retail. Strong uptrend, trying to break out through 2024, make new highs 2024, 2025. And you have to go back to previous bull market back in 2021, retail higher. Oil has been weak, continues to be weak. Metals and miners has been a strong sector, continues to rally. We do have a pullback today, but still bull trend is intact. Consumer discretionary retesting all-time highs, 2025 highs. So that's been a strong. I mean, today healthcare has been underperforming, but people are rotating into the value stock. So you can see outperformance since consumer staples, healthcare, and utility, right? These are the usual flight to safety asset classes. They've been going sideways, except utilities, because it's considered to be a safety asset class, but you also need electricity to power AI demand. So XLU has been in strong uptrend. Technology, XLK, we have a sharp pullback in XLK, close to 2% today. Industrials are still positive, so you don't see a sell-off. It's still kind of more of a rotation out of the technology into these interest-sensitive sectors. So XLI is still positive, XLF is still positive, both close to all-time highs. Home builders continue to outperform, right? So this is not a sell-off, right? This is more of just a rotation. Again, REITs, people are rotating to REITs, VIX. Junk bonds are stable, so there's no sell-off in junk bonds. They're close to 2025 high, 2024 high, 2023 high. So the spread between the treasuries and junk bonds, ample of liquidity, so that's still fine. Semiconductors are down 2%, but still close to all-time high. Transportation is up 1% today. Silver pullback 2%. That's about it. Any question? Palo Alto, we had Palo Alto, our earnings up 4%, and then TJX, Lowe's, and ADI are announcing earnings. Questions? Alex Keller, Carol, welcome back. Chuck, Feridun, welcome back, Feridun. George, Lalit, Dr. Simon. All right, I do have a great announcement. We're finally caught up with I know some of you are paid subscribers. So we had issues for the past couple of weeks synchronizing my orders with positions. But this has been fixed. So now you can see my orders today. I put Tesla and Meta just to make sure it's in sync. So now if you go to positions, you can see all of my orders, right? You can see my JP Morgan position, you can see my Meta position, you can see my Tesla position, right? So these are the earnings. Now you can see orders, positions. You'll get an SMS message. Some people ask about when AI analysis is going to be back. That is also back. So we're back to normal. Thank you. I appreciate your kind words. I'm glad you were able to make it. Thank you for joining. Again, every Tuesday I try to be consistent. Sometimes schedules changes, but most of the Tuesday at 12 o'clock Central, 1 Eastern, I'm here, for this 30 minutes, 40 minutes overview, answer any questions that you might have. So you can see all of my option positions, if you're trading stocks, you can see the same thing in Profit Accelerator. Earnings power trader, right? Today, TJX announcing earnings tomorrow morning, so I did TJX order. So I got filled actually. Still some issues with API. It says new, but I actually got filled, so it is filled. So I sold TJX. Is the earnings trade, right? So you can see TJX at all-time high, right? Kind of following the Home Depot with the assumption that interest rates will go down, people will have more discretionary income, and they're going to spend more money. We'll see if that's the case. So on TJX, I was looking at the gamma exposure for TJX, right, this morning in live trading room. We saw one standard deviation to 140 to 130, right? About 4% to the upside, 4% to the downside. Expected move has been average 3%. Expected move based on implied volatility is about 4%. So I took a little bit bearish view this morning. So I sold the call spread that it will not break 140, right? So I sold 140 call, bought 141 call, but instead of an iron condor, I actually did a debit put spread. That the sell-off might continue, right? Pullback. If retailers don't deliver strong earnings, I mean, Home Depot had a decent earnings, so, but that could be just, again, perception of interest rates and home building activity. But if TJX unable to break to the upside, right, if they don't deliver strong earnings after a pretty impressive rally in 2025 and 2024, then, the risk is to the downside, right, that they could pull back further. So that's TJX, and that's earnings power trader. Again, you can see my orders, positions. You can enter your phone number and get an SMS message, and you can watch the recordings of live trading room, right? Other signals are aggressive power trader. This gets updated every day. Now, you can see Johnson & Johnson was the signal for today. Right, you can see every day we publish signals. This is based on our AI model, learning, right, and making inferences on the price movement earnings. Similar to our chat, try this chat. You can talk to our live chat. Not live, this is a chat bot, right? But you can ask what what is the difference between debit call spread and put spread, something like that, right? And so it's trained on our data, and it will give you structures of debit spreads, call spreads, put spreads. You can ask about, what is the best service for option trading you have to offer. And again, it'll tell you what the services we have, what are the advantages, holding period. So, I mean, this is amazing. So we live in a new age of AI training, where you don't really need a live, or you don't need as many live customer service where you can, use chatbots. But again, in terms of support, I think we're still pretty far from getting rid of, it's not perfect, right? It doesn't answer as well. So you can always go into contact and schedule, live consultation with the live human, our product specialist. I encourage you to take advantage of that, and you can ask emails a question from the live product specialist, and we'll be able to answer your question. So that's aggressive power trader, right? And we're training our bots not only on customer support questions and our videos and our information, but also on coming up with the signals. So we have Johnson & Johnson for today. Let's see, I didn't even look at Johnson & Johnson. How's it doing today? It's actually outperforming the market, right? So model did find stocks that, and unlike healthcare that has been underperforming, right? Usually, the model actually tries to find stocks that are outperforming the market, like Johnson & Johnson. So if you want to exposure to healthcare, if you think it's oversold and this is a safety asset class that people will gravitate towards, so that's Johnson & Johnson. Again, this signal was generated yesterday, right? And it's meant to last you could do it as a short term, 1 to 2 days. Sometimes I hold it for a week, maybe a little bit longer. But these are aggressive short-term trading, and the model runs every single day, learns on the data, and makes the prediction. Moses, welcome. Let me know if you have any questions. Oh, we have a full house today. A lot more people. Great. Back to school, everybody start participating. Love it. So that's aggressive power trader. Not everybody likes to make short-term decisions. So we have a weekly power trader. These are the models that makes predictions for, it's published every Sunday, right? So every Sunday the model runs, makes predictions. It again, the idea is to only risk 4 positions at a time with 2.5% maximum loss. And the holding time could be a couple weeks, right? It could be a couple weeks, it could be a month, right? But it's more of a longer term position. You can see actually today market is down, but model picked up CSX on Sunday. That's doing well despite market pullback. Ford is doing well despite the sell of the utility. Is doing well despite the sell of Leonard, right? Home builders, Warren Buffett invested in Leonard. TGX is doing well. Nike is the only one that's slightly down today, but the rest of the stocks are in strong uptrend. And that's the idea of the models, right? To find the stocks that can outperform their sector or outperform the S&P. For how many hours per week is required to follow your strategy? Again, depending on your background, right? So there's no, you have to keep in mind that all of our subscribers are at the different stages of their career. Is it necessary to trade every day? No, you can see I don't trade every day. Like in dynamic power trader, this usually, I do 1 or 2 trades a week for the option spreads, right? Earnings power trader usually once a week, right? Aggressive power trader, again, it depends on your background. If you have a trading plan and you just need signals, right? And you trade on every day, then aggressive power trader, you can trade every day. We do have a lot of subscribers that are active, either day trader or short-term aggressive trader, and they trade on daily basis. So they do want aggressive power trader service because it provides signals every single day, right? And usually in the live trading, the minimum, not the minimum, but for day trading, we have live trading room, right, every day, and this is about an hour in the morning. So I would say you need an hour every day in the morning if you want to do day trading. Well, you have to, right, because that's where majority of the action is going on. If you're busy, right, if you're new to trading, first of all, if you're new to trading and you need some guidelines, I do encourage you to consider our coaching program, right? You can click on this coaching program. We do offer one-on-one coaching where we can come up with a custom trading plan based on your background, based on how much money you're managing and where you are in your journey as a trader, right? So that's, I would consider coaching, but that's time and financial commitment. So I would definitely either participate in live trading room, that first hour of every trading session when the market opens, that first hour, or if you don't have time, watch the recording, because everything gets recorded, right, in this live trading room. So I would say you need to spend at least 30 minutes to an hour every day if you're not doing day trading. If you're doing day trading, I would spend like at least an hour every day, because I mean that's what day traders do. But if you're not day trader, then I would consider weekly power trader. This, again, is generated, these are the signals that generated every Sunday. You can place your trades on Monday, close them on Friday. That's what I usually do. Sometimes I would hold it another week. And same thing with dynamic power trader. Right. Earnings power traders as well. I usually only do 1 or 2 trades a week, and you get SMS message and email. So if you're doing, again, but remember that trading is a skill, right? It's just like if you want to learn how to play chess or you want to learn how to ski, you can't do it if you just don't invest time. So trading is, it's knowledge. It requires commitment. That's why I think to be successful, you do need one-on-one coaching program. If you kind of want to do it on your own, then I would invest at least half an hour a day, an hour a day, watch the recordings or participate in live trading recordings. Yeah, so in terms of if you don't have, if you're not a day trader, I would go to dashboard. Every service described here, right? So under dashboard, it says find the service that fits your trading needs. And you just scroll through them, right? If you don't like to day trade and you want to see what I trade, I would suggest dynamic power trader, right? You can go to price, right? So this is dynamic power trader. Right, alerts issues, once a week. You have usually 1 or 2 trades a week. Holding time 5 to 10 days. I use option spreads. If you want to earnings power trader, this is again 1 or 2 signals a week, and then profit accelerator. These instead of options, you can trade stock. Same idea. It's a couple trades a day, a week, a couple trades a week, and again, I send email and SMS message every time I would trade. So if you want to see what I trade, I would use either profit accelerator. This is stock trading, or dynamic power trader. It's an option trader. If you just need signals, this is only published, every Sunday, and it's weekly power trader. And in terms of pricing, you click on pricing and it tells you how much each of these services cost to sign up. Thank you for your doing. Thank you for all those questions. I appreciate it. All right, so we went over dynamic power trader, earnings power trader, profit accelerator. We do publish blog, so every Sunday I issue a blog. So this week it was Meta, last week AEP. I talk about my personal life or some concepts in trading. So I encourage you to add info at yellowtunnel.com so you get email with our newsletters, right? Then under trend analysis, every Tuesday, Wednesday, right? Today, tomorrow, I publish the video, right? This market analysis, 1 hour, half an hour session of my view on the market. So I encourage you to do that as well. So this is free content, right? Blog and video blog. Or webinars. This is free content. There's a lot of concepts on trading psychology, right? Some of the things we teach in one-on-one coaching program, right? If you do consider one-on-one coaching program that you can click here and apply. You'll get it's half an hour session with our product specialist. Again, if any, this is free. If anything, you can just learn about our program, learn about what it takes to become a trader. So I think this is a good, time well spent. And in terms of trading, what we also teach on these trading psychology is not in terms of position size, right? What we talked about in each of these services. Most important is 4 active positions and 2.5% loss, right? This position size and concept of how do you determine position size. So we go through a lot every day in live trading. We go through this concept, but also we talk about risk aversion, right? Yellow tunnel. A lot of people ask me, why did you, what is the yellow tunnel? Why the name? So the idea was trading psychology, and the idea that you have risk aversion and prospect theory, right? A lot of concepts in psychology are very important. Biases, right? We have different self-serving bias, but risk aversion and prospect theory basically says that, talks about that we have different sensitivity, right? Or there's a asymmetrical relationship between the gains and losses, right? $100 gain feels different than $100 loss to me, and then John, $100 loss for John is different than $100 loss for Mike, right? Because we manage different amounts of money. We are at the different parts of our journey as a traders. So that's very important to kind of here. The trades, credit spreads, and SPX. So Chuck, I don't trade I talk about SPX, on daily basis. So you can use any of our service, just participate in live trading room, and I always go through this analysis, right, of SPX. right? And ideally, if you're a day trader, on SPX, then right now you would be selling 6,400 put spread or put, right, or buying call, right? And if we reach 6,500, you would do the opposite. So these levels, I always talk about them. I mean, I don't day trade this spiders, but in my personal account I do. But I do tell you what are the most important levels and where to consider trading them. Thank you, Chuck. So I encourage you to kind of review the website for some of these concepts in trading psychology. You can find them under trading discipline, right? Different concepts on trading psychologies, how to master call spread. In market plan, you can find different metrics for consistent trading results. So I mean, these are concept, risk management concepts that are important, and they're also free content that you can use here. All right. Any other questions? Alex, Carol, Chuck, Danny, Feridun, George, Goran, welcome. Lalit, Moses. We have a lot of new people. Any questions for those of you who are new? So again, if you're new and you want to try any of these services, we do give 30-day money back guarantee. I would go to dashboard. First of all, I encourage you to create an account. It's free, right? You get access to our recordings, blog. So I would definitely try that. In the dashboard, you can actually see free services that, dedicated support, blog, getting started guide, webinar recordings. And then if you're looking for paid services for signals, then each service is explained here, right? You can scroll through it, watch the video where I explain this, and actually try it out, any of these services, and you do get 30 days money back guarantee. What else? So we went over, and in terms of signal, I went over for this week. This was published on Sunday. You see, here's the different. I mean, I do like transportation that's been doing well. Some of the consumer discretionary, utility stocks, home builder stocks. This is all makes sense to me. And I mean, short term, I would watch. Basically, again, wait till the end of the day, but I'm watching carefully SPX levels. Right, that's probably one of the more important chart. So we basically already retested 6,400, right? We have 6380 is your 20-day moving average. So this level is important. If we can hold this level, then bulls are in control. If we drop below that level, then it opens the quickly door to either 6,200, right? Beginning of the August lows, or 6,300. Any questions? All right. If for a couple of the new guys, again, I mean, you have here helpful guides, something to scroll through on some of these helpful guides, video examples, getting started guide. So that's very all useful information. You can ask chat about our services, our chat bot, or what we offer, or just general information, and then you can always schedule either one-on-one consultation or just ask us a question as well. All right, that's all I have for today. You guys are awesome. Thank you very much. Alex, thank you for coming back. Carol, Chuck, Feridun, George, Goran, Lalit, Moses, Dr. Simon. I'll see you guys hopefully in the live trading room tomorrow. And if not, then, next Tuesday, same time. All right, guys, thank you very much. Have a great day, and I'll see you soon. Thanks. Appreciate your time. Thank you, Alex.